Welcome to our second video related to accounting for retail operations. In this video, we're going to focus on two specific issues. One relates to FOB, or free on board, or freight on board, and consider this from the perspective of FOB shipping point or FOB destination. The next piece of the video, we're going to focus on the dual nature of transactions. We're going to consider several transactions, but consider these from the perspective of both buyer and seller. Let's take a look at the FOB diagram. What we see here is there are 2 points that we need to consider. The FOB shipping point. The FOB shipping point is when the seller transfers the goods to a freight company, UPS, Federal Express, or another freight organization. In an FOB shipping point, the buyer is going to be paying the freight. The FOB point, in this case shipping point, is the point of transfer. At the point of transfer, when the seller transfers the goods to the freight company, the seller records the transaction. The seller is going to record the sales revenue and the accounts receivable. And at this point, the buyer is responsible to pay the freight. Generally speaking, the freight is going to be paid directly to the freight organization. In the other instance, we have FOB shipping point. In this case, the title transfers at the point when the buyer actually receives the goods. In some cases, the buyer receives the goods and also has these goods, the equipment or whatever it is, actually installed. So it's not until the goods have been delivered and installed that the seller has a completed transaction. At the point of the completed transaction, the seller is going to record their revenue and accounts receivable. And if this is FOB shipping point, the seller is going to be paying for the shipping. So let's take a quick look at a specific transaction. In this case, on December 10th, TechSource, who is the buyer, buys merchandise from Magna Data on account. The merchandise cost $900 and the terms are FOB shipping point. FOB shipping point means that the buyer is paying for the freight. In this case, the buyer, meaning TechSource, is paying the freight cost directly to the shipper. So the transaction here is that the $50 is paid in cash directly to the shipper. Generally speaking, what will happen is on delivery, the receiving organization will have a check waiting for the shipping company. But you also notice that the accounts payable is $900. It's $900 because this is the merchandise that was purchased from the seller. The inventory is the total of shipping plus the cost of the merchandise. Inventory increases by $950. Inventory reflects the total cost of the inventory plus shipping and storage and any setup costs that are related to making the merchandise ready for sale. Let's now shift our attention to talk about the dual nature of merchandising transactions. Keep in mind that with every transaction there is a buyer and there is a seller. In this case, we're going to look at a specific transaction. On July 1st, Scully Company sold merchandise on account to Burton Company for $7,500. The terms are FOB destination and 2/10, meaning that if it is paid within 10 days, the buyer is going to get a 2% discount and net 30. In this case, the cost of the merchandise sold was $4,500. As we go through this transaction, we are assuming that the buyer is going to take advantage of the discount. Therefore, every transaction is reported net of discount. A 2% discount of $7,500 means that we are recording a transaction at $7,350. This is the net of discount transaction. We are reporting also, from the seller's perspective, a reduction in inventory, and then the impact to retained earnings is the gross profit. Gross profit is sales of $7,350 and cost of goods sold is $4,500. In this case, what we see is that the customer is buying on account. Therefore, we are increasing accounts receivable by $7,350. And of course, since this is a point of sale transaction, we are also reporting the reduction in inventory and an increase at the gross profit level in retained earnings. Let's now look at the same transaction from the perspective of the buyer. The buyer in this case is Burton Company. They are buying goods for $7,500. However, the expectation is that they will receive and pay for the goods within 10 days and receive the 2% discount. Therefore, Burton is reporting inventory at the net of discount amount of $7,350, and because the transaction was on account, the buyer is reporting accounts payable at the same amount of $7,350. The buyer has no interest in the transaction related to the cost of merchandise, which was the $4,500. They are only interested in the transaction from the perspective of how it impacts their own financial statement. This concludes this brief video related to retail transactions, specifically focusing on the concept of FOB shipping point and FOB destination, as well as considering the dual nature of transactions. Whenever we do a transaction, we need to make sure that we are doing these transactions from the perspective of either the buyer or the seller.